Good evening. Welcome to the Forex Pro Chart weekly analysis for the week beginning May the 15th, 2011. This week we're going to look at the GBP JPY pair. Okay, looking at the monthly chart for the GBP JPY pair, we can see that price is at the lower edge of our trading field, and price is between the monthly armpit and the lower edge of our trading field, which is a monthly low marked by from this particular candle, and price this month has for the first 2 weeks has declined from the monthly armpit down to the weekly armpit, which is a little bit hard to see on this view because you've got a couple of zones right here and some blue and black, but you can see that little black line, black dotted line through there, and that's our weekly armpit. So price so far this month has actually basically declined and is between this armpit. Now you'll notice that last month it looked like price had breached this monthly armpit, which is usually what we are looking for to see if we think that price has actually reversed. Is it able to stay above this monthly armpit? So last month price breached but was not able to stay and closed below, and so then has declined since then. Now that doesn't mean that we're not at a reversal point and that price won't still reverse long term, but it does look like price is going to stay down in this area for a little while longer, and of course does mean that price could continue down and we could see a breach of this lower edge of our trading field, as we've seen over the last couple of months on a number of our pairs where an edge of an upper or lower edge of the trading field has been breached and price has remained beyond that solid line. However, for the GJ, we're still quite a ways from there. You can see this is 118 something and price is here at 130 something. So even though the GJ is a volatile pair, we still have quite a ways to go before we see price breach this lower edge of our trading field. And what we're going to be looking for now is to see whether price bounces back up off this weekly armpit or continues back through. Let's see, that's about all I want to talk about on the monthly. Let's go ahead and look at the weekly view. Okay, so looking at the GJ weekly, again we see where price last week had moved down, 2 weeks ago had moved down quite significantly from this zone that formed, and price moved down then this week all the way to this support zone, and we actually had a trade at the very end of the week on this zone that we looked at in the results video, and we'll look at it a little later on on the hourly chart as well. So we see that this is not, although you might at first think that this was a pattern on the weekly chart, that this zone was from a pattern on the weekly chart. It is not. This price moved all the way down here and then back up, so this level here is actually part of an uptrend, and there's not a weekly pattern on the weekly chart. To get to the weekly pattern, we would have to go down here. So we don't have that at this particular zone. If price is to move back up, we've got a very, very slight pattern on the weekly chart at this first resistance zone, and then of course a clear pattern at this second resistance zone. When we see price move up there was a clear pattern on this weekly chart where you had the rally base and then drop. So when price gets back up here, we'll have, of course, ratio, because we've already achieved a 3-to-1 ratio, and we'll have the pattern on the weekly chart, and we'll also have a red candle at the origination of this zone on the weekly chart. And we'll take a look at the daily chart and see if we see that there as well. Let's see, this is the red painted candle that we talk about as an odds enhancer. So looking at this zone, we are going to see whether or not price continues up. As I said, we had a trade on this at the beginning of the week. Price could be stymied from moving all the way up by this trend line, but could also breach that trend line and move on up. And if price does move up here, This zone is supported by the monthly armpit, so we would expect to see a bounce at the 60-minute armpit or the monthly armpit when price moves up to this zone. So that armpit running through it makes this zone stronger. Let's go ahead and take a look at the daily chart. So here we see the daily chart, and we see price came down from this zone and kind of bounced around, moved to the zone, came back up, bounced off of this trend wall, and then came back down. And we're going to take a look at that on the hourly chart. To look at the daily chart, we don't see the red painted candle at this zone, but if you look up here, you realize that this is the red painted candle coming out of that resistance zone that we talked about having the clear pattern on the weekly chart, and this is the red candle coming out of that zone. So that's going to strengthen that chart, that zone. The resistance zone above this one should be a very nice zone for us. Now here we're looking to see what price does, whether it is able to breach this trend wall and move back up to this zone, and if so, we will likely take that trade, because as I said, the 60-minute armpit is supported by the monthly armpit right here. So basically we would be expecting to see price move up. Now you can see that we had the first revisit to the zone, then price came back down, touched the zone. I believe did not go all the way down to the 60-minute armpit, but did touch the zone, then came back down. So this is really a second revisit to the zone, even though it's only the first visit to the 60-minute armpit, and we could see price move back down and breach this, because, as you know, each subsequent visit to the zone increases the chance that the zone will be breached. Let's take a look at the hourly chart and see what we can find out about the trade that we had this week. Okay, here's the hourly chart, and we see where price, hit the daily armpit, flirted around with that, and then moved back up, bounced off of this trend wall as we talked about, and then came back down. Right here is where you see that price hit the 60-minute armpit and the weekly armpit, which are commensurate with each other, and bounced up, and we had a gain of 92 pips before price came back down, and everybody should have been protected to break even here, and so everybody should have stopped out, but price then did go ahead and bounce off of the 5-minute armpit as well. So that was a nice trade right at the end of the week, to see that 92 pips come right in there, and then this zone could still be active. Price has not breached the zone yet, and price could continue up. As I said, it will have to breach this trend wall to get back up to the next resistance zone, which is what we probably would expect it to do this week, but we would not be surprised to see it breach. If price does come back up and then return to this zone without reestablishing ratio, then we most likely will not take that trade. Now, this is a fairly small zone, but you can see you'd have to go let's see, about 1, 2, 3. So right here, price had barely reestablished ratio coming back down here, but it's pretty close. So we would want to see price move well beyond this trend wall, and really nicely beyond this level before coming back down, before we would trade that zone again. And even then, I think we would take a look at price action and decide at the time what we thought about that in terms of how long it took price to move away and how it was coming back down. And we would consider those things before we posted an alert. And as you know, if you subscribe to our charting service, you can choose from several levels. One is the basic level, simply gives you access to our full analysis, our educational materials, and so forth. Our enhanced level gives you all of that, as well as custom alerts during the week when we see price approaching a trade, and we will post that and offer some discussion from the analysis of the previous week as to whether, and as well as the price action since then, as to whether or not we should be taking that trade. We have just started posting alerts on non-trades, so to speak. We used to just post alerts on trades that should be taken, but decided it was more educational and would help our traders learn to trade independently better if we, as the trades occurred, offered discussion on those zones that should not be traded and why they should not be traded. Would help avoid our newer traders making mistakes, and so forth. So you can get that in the enhanced level, and then in the premium level you get full access to our charts, and you get the weekly download of the charts already set up, which will save you hours every week in preparing for your charts. And so you'll get a chart that already looks like this for the week. You won't have to draw your lines and draw your zones and determine exactly where your armpits are. So that's the premium level. So you can choose one of those 3 levels. You're welcome to start out with the demo. We would encourage you to do so with the demo for a week, and then welcome to start out with the basic level. See how you like our system, and then I think once you've seen how it works, you will be happy to get the usefulness and the efficiency of having the charts already set up for you. So that's our analysis for the week. For more information or to subscribe to our full analysis and charting services of 10 major currency pairs, please go to www.forexprocharts.com. Have a good week, and we'll see you next week.